You guys, my crude friends, all my crude trader friends, just would walk out of the office today and like just look out the window. I'm
Are
like,
they
are
still
you?
alive? I was
Yeah,
gonna say crude is just it's been a shit show. That
it's
There's so many parabolic moves though that it's just gonna make sense at some point to just stick your toe in the water
yeah.
and grab some puts because you're gonna score on some of those just by sheer mention that it's not going to go up in perpetuity. It's going to come back. There's going to be some
Yeah.
kind of reversion to the mean. You're gonna get one of those trades to work.
Yeah.
yeah. By the way, the crude guys are solid professionals, and to see them a little bit rattled, it was $42,000 on a one lot in
Whew.
heating oil in about 10 minutes.
Damn,
That's nuts.
that is nuts.
Yeah, it
Right?
reminds me of was it May 2020? Yeah, May 2020 is when oil, or April was when oil had went negative. It's like a flip of that,
Yep.
except now the upside's popping off. So
Yeah. Yeah. I mean, these guys are pros, and to see them rattled, I mean, big pros. I mean, I've never seen, anyway, enough of what I've seen. Fuck.
All good, all good. Well, let's kick it off. So welcome to the Misfit Happy Hour. I'm your co-host, Ron Friedman, with Chris Cady, and a special guest from the Steamroom, one of our in-house traders, goes by the handle of VAR. VAR, what is your actual name?
it's Varen is my actual
Varen.
name. Yeah,
Okay.
Var,
Okay.
Var, whatever y'all want.
Okay.
Varen, idiot, take them all.
Hey,
Her.
Varen, who named
Yeah.
you, your mom or your dad?
Mom did.
Yeah,
Yeah.
that's appropriate, right? Moms get to name you. That's an interesting. Have you ever met another Varen?
No. So a lot of people, like my mom named me, I guess, Varun, but my dad was part like Guyanese, and he wanted to like have some like exposure to the name. So he's like, we can name him that, but then we're gonna call him Baron. So now here I am,
Here
a
you are.
confused 29-year-old.
So I'm just taking a look at your bio that Charlie sent over. So you're 29. You live in the New York in Jersey area. It says you went to school for biology because you were confused coming out of
Yeah.
college. Is that
Yeah,
right?
I went to
Or you
bio
went to
for,
school?
or I went to school for biology slash like econometrics. I always had a passion, like growing up, like as soon as right after high school, as soon as I hit 18, I like had my own trading account, was doing a lot of Delta One, like just commons trading stuff.
Mhm.
And then around college, I started getting more exposure to like volatility, options, futures, stuff like that. And that was around when everything kind of started going to the upside in terms of like usage of options. So,
Okay.
yeah.
Gotcha. And so what do you do now?
Right now, I'm a strategist for a home builder. So one of my friends needed some data modeling people, and also people that have some sort of knowledge of like term structure and commodity stuff. I have knowledge of term structure and like volatility. I actually didn't have much exposure to commodities until I really started the job. But it's fun, man. It's fun. It's a weird time to be in commodities. We obviously work specifically in like lumber, some of the metals, but
I've
as
managed lumber. Lumber went just
yeah,
that shit
it's
crazy. How did you deal with that?
so I mean, this isn't really like a secret sauce at all, but I think probably the best way that we've tried to get around it is we are obviously in a interesting position where we're not so much traders because we consume what we buy, like we build homes, so like we're going to consume the lumber. So it's more about hedging that downside risk. So we'll buy in bulk of specific SKUs of lumber that we know we need. We'll warehouse it and then have an embedded put to hedge off any downside. And then if that put kicks in, we'll capitalize on the profits, maybe take it off. But we work with a third-party intermediary to work around
Gotcha.
that. Yeah.
So you don't do what Cady does, is that hops into his car and drives around the Northwest to see how much lumber is stacked up
Oh,
in the
we
lumber
have one of
yards,
our
right?
directors. We have one of our directors do that.
Do you really?
This
Do they
man,
go out and drive around and look?
this man, when
That's
when we were
awesome.
implementing this, he would like go to a lot by lot thing to make sure lumber wasn't being stolen. Lumber was like properly being bought and stored. It was a
Uh-huh.
bunch of stuff.
Wow, because I remember that example that Chris had given regarding lumber and the actual amount of lumber that you would see in lumber yards compared to pricing. It was an interesting perspective. And now meeting somebody who's actually done it, I want to, I'm curious to know if you actually go out and take a look at the actual lumber that's hanging around.
It's so far. Excuse me to interrupt. It's so far from reality. Like nobody trades lumber.
Yeah, exactly. For like 5 years.
If I'm watching you and you're talking about trading lumber, I'm like clicking off. Like, right? Everybody who's not a lumber trader, have a nice day.
It was like pre like May or probably like November 2020. No one gave a shit about lumber. And then since then, like millions have been made and lost just through like one day of limit up or limit down. So
have you ever been caught in a limit move against you?
We had, so.
And then when you were caught for a limit move, how many days did it go against you, that limit?
A limit move against, so this is why we work with a third party to embed a put. If we had a futures account and we're short, like a spot, we bought it, short something higher, and that goes against us, we got to fund that futures account for the margin call over and over again. Versus the embedded put, if it spikes up, we have no exposure. We're going to consume against it, and we're fine.
So in a sense, you're not really trading. You just haven't bought. You have a neutral longish position with an embedded put, right? So you have no risk.
Yeah, we have minimal risk.
I mean, really come on. This is the Misfits. Get real. This is like not a trade. This is just you're just managing a guy's lumber need for lumber.
This is
right. You're not going to blow out.
Job.
Like what the hell? Like get over yourself.
If I blew out doing this, it would be very bad for the full-time job, and then I'd have to become a full-time trader and take on all that stress. So
yeah, come on, lose the lumber. Can we talk about risk for a second here? Like
yeah, of course.
I mean that's where you started in risk, right?
Yeah, I started risk advisory for healthcare sector, a bunch of things. It's just risk consulting, so wherever they put me, really.
Okay, so if you're say you're not you, but you have a better idea of risk, and we're interested in say margins because you can see the nature of markets these days. Margins are a consideration. At what point, how many standard deviations does it take to be off the radar of risk? If you're selling naked puts, if you're 2 standard deviations down, 3 standard deviations?
Two's got to be your limit, right?
Probably 2. Yeah, if you're doing risk on today's metrics, it also depends though, because like risk in terms of naked puts is very different from like a risk that exotics desk or someone might be managing. So, but like if you're doing just like a basic like
our viewers are not exotic desks.
So if you're doing a very like Gaussian distribution, it's going to be 2 standard deviations. You don't mess with anything below that. You can't hedge it. You just get blown out.
So, I mean, for example, if you were somebody from another country manage money in a power of attorney accounts, getting a percentage, and then getting greased back on the brokerage, which is legal. If you're outside the country. So you could just then nakedly sell downside premium 2 standard deviations in other people's accounts who don't know what they're doing and be off the risk manager's profile.
Correct. No one would tap you on the shoulder and be like, hey, you got to buy some Vega in case we go full to the downside or anything like that.
Right. And it kind of works perfectly in equity index options because they expire every month.
Yeah,
right.
Exactly.
You don't have that, right? If you go 14 days to 15, 17 days to expiration, you sell 2 standard deviations down for up to 4 ticks.
Yeah.
And then because they don't hit risk, right? So you can just load them up and then your clients have no clue.
Yeah, exactly. And I think that's like a lot of my models that I kind of work on. So I do a lot of Python stuff and algorithmic stuff out of it based on like relative value. And you can see that in the tape of just like vol just being suppressed at a specific strike that you wouldn't expect it to be suppressed at, where there's like a slight kink in the vol curve. and
That's
you'll just be
the
like,
wrinkle. That's the wrinkle in the risk right there, right?
yeah,
Where they've figured out that this can be, you can load this point on the curve and stay out of the risk crosshairs.
yeah, exactly.
Yeah, genius. I mean, genius until you blow up your clearing
Exactly.
house.
I was just gonna say it's genius until you get that 3-4 standard deviation move, and then you're just fucking underwater, and there's huge counterparty stuff on that. So,
I mean,
but I
for
guess it's
real.
not your money. So,
Yeah, for real. The reason I know about it is I know a guy from Argentina. His name was Miguel, who did this and almost took down UBS in 2008.
oh God, I'm
Right.
surprised UBS was into like they had outsourced like that, and they were okay with it. Like, or
Well,
did he work for UBS?
no. He was a broker, and all the accounts were at UBS,
Oh God.
and so, but two standard deviations down. He knew it's two standard
Yeah.
deviations down, and then, then it was all of a sudden. Then it was real. What was
Yeah.
amazing to watch was the trader who unwound the position at UBS when they blew all the clients' accounts out and they took the position was amazing. I have them amazing. He got them out. Unbelievable. I mean, and he
Unscathed for the most part.
pretty close. I couldn't
Yeah.
believe it. Given that they're actually futures after, in 2008, they literally became futures, and he got them out. I've never seen a better trader get out of a position that wasn't his
Yeah.
than that guy at UBS. I was just like, wow, so good.
So Var, how do you use all of what you're doing professionally in
Yeah.
your day to day?
Oh shit, my day-to-day job, I don't use
Yeah.
any of it, man. I like people, like, you got to understand. It's like Chris Cady said, right? No one gave a shit about also anyone listening, this is going to be like NSFW. I'm just fucking whatever comes out of my mouth comes out of my mouth. So I'm sorry. But no one cared about lumber until recently. So like a lot of
Mhm.
the understanding around like volatility, standard deviations, unless
Mhm.
you're speaking to like a true bred lumber trader that's like does this shit for a living, just goes over executives' heads. So a lot of the stuff that I'm doing, I like try to communicate in the most digestible form possible. But like Chris pointed out, I'm just really trying to protect the long exposure that we have by neutralizing drawdown. I'm not
Mhm.
speculating. I'm not doing any of that shit. I'm just managing the premium that is paid and making sure that our margins don't compress too much
Gotcha.
with that.
So how do you trade in your day-to-day account then in your own
Yeah.
personal
Ranch,
account?
that's not trading, Ranch.
I said not trading.
That's not trading. What he's doing is not trading. He's executing a strategy for people who need to buy lumber and trying to limit their downside.
That's fine. Well, that's why I'm asking how he trades in his regular account.
Yeah, so in my regular account, I have a lot of stuff that, well, I have 3 books essentially, and this is I lay this out in the bio. I had a discretionary book, which really looks at kind of just my overall macro views. I posted a couple of thoughts on that around like November, December of last year. Took on a really big position in index shorts, started with RTY, went into NQ, poorly entered SPX into that Thanksgiving dip because I got a little bit overzealous with my profits that I was racking up. And then I had to just manage that shit into the end of the year. But that paid out really well the past 2 months. So right now, that book is kind of just in cash. I feel like there's a lot of unknowns. I'd love to go discretionary again, but I just don't think that right now is the time for me to really take a really big bet on upside or downside.
Mhm.
I also have an EVRV book, which is like essentially relative value options trading. That kind of goes along with like what you do at TTP.
Yep.
It really just looks at and you do it in a more digestible, like someone new to options trading, like you like coach them on the methodology that requires. But high level, it's really just buying options that are cheap, selling options that are expensive, and hedging your deltas across that entire position to make sure that if there was a market shock, you're not eating shit on the entire allocation that you have to it.
You still sound like such a pussy. You do. You sound like such a pussy. You're like, I'm a relative value trader. Okay, for someone watching, you'd be like, relative value? Explain that to me. Relative value is anything divided by the Fed's balance sheet.
Hey, fair enough. So another big concept that I believe in. First of all, I manage a bunch of my family and friends' money, so that really
Yeah,
affects my risk
about
spectrum.
right. That's the riskiest personal thing I've heard all day.
Because they know where I live and they have dirt on me, so I'm trying to like just not do any degenerate shit, basically. Um,
You forget you're on the Misfit Happy Hour, all right? These are degenerates who have survived in an unconventional fashion.
Maybe I'm here to save any degenerates from dying in the next probably like 8 months by again just saying that we're in a weird time. But anyways, we'll get to that.
Okay, Mother Teresa.
Last thing is I manage futures, and I know Chris does a lot with volume profile, and that's essentially like the only real indicator that I use to trade futures 99% of the time. So a lot of looking at levels, looking at where people are trapped. A high level, I think like the market's just like an amalgamation of people's psychology. So I feel like volume profile does a really good job of showcasing that in a visually easy format.
When was the last time you had a big losing trade?
Oh shit. Well, that I realized or that I worked around. You can have a losing trade. Well, I guess realize would be the thing. Probably 2019 was the biggest losing trade that I had. I went short vol.
I mean, recently, like have a big.
Oh, recently. Honestly, not to sound pompous, I've been on a really lucky streak this year. It's been really good. And again, like I said, I'm not trading like high frequency. I'm not trading intraday. Like a big portion of my wins this year and across my whole allocation for all my accounts has been the discretionary part. And I got lucky.
What would you give as advice to people who are in the markets every day?
To understand that we're in a higher volatility regime, and that requires more precise sizing. I think that a lot of people go into higher vol regimes doing options.
Spoken like a true risk guy. Like, oh, by the way, your potential for blowing out equals the expected average true range.
It's funny. I literally posted something on like Kelly criterion sizing of bets. So
yes.
It's maybe like, not so much a misfit, but no, I just think like a lot of people go into these high vol regimes being like, I'm just going to size the way I would when VIX is at like a 14, 15 handle. And then they eventually just get blown out because they are bad at forecasting the vol moves.
Yeah, I mean, essentially what we could tell people is your background in risk is like how to avoid margin calls. You know, since you have a background in risk, I think it'd be helpful if we go down the road of like, if you think you're at a turning point and margins are high, so the risk guys are very close to picking up the phone on anybody who's kind of overstepping their bounds. How is the best way to load the boat without attracting the ire of your risk manager?
So typically when we were in the risk department, people were about to go batshit with risk, we would tell them to buy cheap Vega. So they would hit way short dated out of the money stuff to neutralize some of that Vega exposure that they had across their whole book. So they've because I mean, options are convex instruments. So like the further it goes out and the more crazy it gets in a short time span, your payout's going to be times 100 on some of these positions. So that would be the best way.
Okay, at the bottom, say example yesterday, right? They just puked everything up, and you could buy downside calls for nothing, which we all did, and then thank God whoever it was came in and bought them all day. The point is that if you're selling, obviously the greatest bang for your buck was selling puts on last night's close, right? And the cheap way out of it is, without alarming your risk friends, is that you just ended up buying Friday calls for nothing, which then went up 6 times today.
Exactly.
Right. Yeah. And so the idea is that while you're going to suffer the vol compression, there wasn't much theta, but you're going to suffer the vol compression on those calls. You just load up on so in other words, you go further up to buy the cheaper wing calls, assuming that you understand that the delta, it's kind of like, it's like trying to catch a long fly ball, right? Like how high can they go, how fast
Yeah,
on the bounce, right?
correct.
And that's a bit, because so if you're a small retail guy, they're not going to let you sell the puts, which were the gravy down there yesterday, right?
Yeah. Or they're going to just jack. Well, it really depends. If you're a retail guy with like portfolio margin, you could probably work around it to give you a little bit more leeway. But if you have a smaller account, like you gotta structure it differently, or get into futures. Like you can even take a directional bet that way. MES even has options that you can hedge against your futures. So
right. But
like,
you're paying huge vol. I mean, even with like we're saying, like the O puts today, when the thing was trading 60 handles to go, if it was trading, what is it, 42.60, right? 42.60. And the
yeah,
O puts today were 40 vol with 2 days to go in expiration. So it makes no sense. In a sense, you just trade smaller in the micros
exactly.
right, than having to pay for that. Yeah, thank you for that. That's way better than lumber.
Hey, I just need health insurance, so that's why I do the lumber thing.
Yeah.
If someone else gives me free health insurance, I'll go back to trading more full time.
Yeah.
Even though I
What do you want
basically
to?
trade full time anyway.
What do you want to be when you grow up?
So I'm debating going back to business school to try to get or like there's a college here, it's like BARUCH, it's like a financial engineering college. Trying to figure out if I want to be a quant or work for a hedge fund in the next couple of years, or open up my own. I don't fucking know. I'm so confused, guys, to be honest. Like it's been 8 years since college and I'm still like trying to figure out if I want to
Well,
just manage my own business or not.
let's see. You're 29, living in Jersey City. There's a good party scene there, right?
There is.
Yep. And you ride the path here.
Yeah.
We should have a beer for sure, since I'm right
Definitely.
on.
We can get some Joe's. I love me some Joe's pizza. So
And then here, where do you think the business will be in 5 years?
well, I think the hedge fund industry right now in general is pretty saturated. There's like 75 fucking vol targeting firms. There's a billion risk parity. There's so much macro. Everyone's a macro specialist.
Yeah,
It's just like,
there's no human traders.
yeah, like everything is systematized, and then eventually there's a huge like value at risk shock, and then there's an extinction event, and then it resets. 2020 was one of those extinction events.
Okay, so back to the original question, where do we see the business in 5 years?
I think that people, allocators, are probably going to realize that they don't want to be paying 2 and 20. So I think like there's going to be an exodus from the hedge fund business and kind of the whole money management business. I also feel like the generation that I'm in thinks that they can manage money better by themselves. So I think I'm hoping that places like these, rooms like these, educators like you all can at least be a guiding light, mentorship to some of the misfits and degenerates that are around here.
Right.
Even though I might not be one of them.
Right now, you're becoming one quickly. We're basically we're prideful misfits because we've survived, I guess. The story being that, all due respect, hedge funds outperform in down markets, right? We haven't had one in a long time, right? So the model,
do they know what to do? They haven't had to do it in 10 years.
The model may change. It may go like, I agree. Your 2 and 20 thing is not work. It will not work, right? The 1% wrap thing for money managers, those guys are toast because they've got so much money under management and they can't be nimble enough to perform in flat to down markets.
Yeah.
So is the new model some sort of hedge fund that is one? I don't know, but
I think that 80-20, 80% stock, 20% vol for drawdowns is probably a better model going forward than a 60-40 risk parity set. I will say that I've been kind of the notion of that, just because.
But you don't think the Fed has come out and publicly said it's their job to contain vol?
Yeah, but I feel like the Fed has to deal with what, 8% inflation coming up tomorrow, and I feel like everyone thinks it's going to be easier. And having exposure to an industry that's directly affected by commodity inflation, I don't think it's going to be that easy.
Let's see what they do when we're at 12.
Well,
yeah, exactly. Like,
I mean, we're still back to the original question: is where you're the young quant potential person, where is the business going to be in 5 years? I mean, you're the one who's confused. You have to make the decision. Ranch and I are 100.
Var, I'll make you an intern.
Yeah, I can work for
I mean,
Ranch.
really, right? Think about it. That's a burden on your generation, not you specifically.
Yeah, just trying to figure out.
Like, what's the path? Because if you misstep now, 5 years from now, you're roadkill.
Yeah, agreed. I really don't know, man. I mean, I feel like that's why I'm hesitant to go back to business school, make that investment to get into a hedge fund business that's going to go bankrupt.
Yeah,
right. Don't look at me. I don't have the answer. I'm just like, I'm like, good luck.
I mean, you could just simply, and it's not as simple, but you could simply do what I do, what Chris does, what Lucci does. Like, you have that acumen where if you came across and set up your own parameters to raise some money, like $3-4 million, like you'd have the opportunity to get off and run, as opposed to try and jump into what you're calling an already saturated market that looks like it has the potential to just completely change into something else in the next 5 years. Like, if you go to school and you come out, whatever you just learned could be completely outdated.
Ranch, where does the business go?
It doesn't matter. To me, it doesn't matter, because I'm going to be able to wake up every day and still come in and do what I'm doing now.
I disagree.
I've been able to do it since 93.
I respectfully disagree. Okay. I just think the game is changing. I mean, you have changed. I have changed. The factor of change in our business is monster. I don't doubt your ability to change. I think you're an incredible instructor. But I just think it's going to be, in Var's case, like, he has the ability to become a specialist in artificial intelligence and deep learning, in any of those things that require a great amount of hours of study. That may be the future.
I think, yeah. I mean, so in terms of like business, are you kind of pulsing on just like machine learning systems doing everything the traders are doing now, like that kind of stuff? Because I think that, so I've worked at, I know you guys know the name. I don't know if I can name drop just for whatever thing I signed with them when I work with them. I worked at a big bank in their machine learning, as I mentioned earlier, kind of like stochastics pricing model for exotics, that kind of shit. So I think that people that are that haven't directly worked in that have I think you think that we're further along the curve than what we actually are. I think in 5 years, some of the machine learning stuff and systemized stuff is going to be better. People are going to shave nanoseconds off of execution times and everything, but I don't think you're going to have some like system of deep learning where you can like outtrade ranches or your discretion. I'm not even gassing you guys up. I'm just being honest. I feel like discretionary trading is a good thing if you have good discretion. Systematized trading is what leads to March 9th events like 2020. It's what leads to people selling vol because they think that their back tests show them that it can't go down anymore. It's at a peak. And then all of a sudden, OPEC decides to like throw everyone a curveball. Everyone gets liquidated. And then we have like plus or minus 1,000-point moves in the NASDAQ daily. That was nuts. That was literally nuts.
How often do you say like things are nuts? Like today,
crude is nuts. Crude is nuts. Natural gas is always nuts. Anytime you look at NG, every single spread across the calendar is a widowmaker, in my opinion.
The world has lost its mind too.
Here's a story for you. In 1985. So there's a clearing of specialist firm, right? There were specialist firms on the floor of the stock exchange, and these were guys who were like the guys who had all the orders, and they were like the referee in the stock, except they could trade for their own account, right?
Yeah.
So they saw every order and everything, and so they were like the landed nobility of this exchange, and they were handed down from generation to generation, right? My grandfather started it, my father, right? And then so Spear, Leeds and Kellogg was one of the biggest specialist firms, and became a clearing firm, and was eventually bought by Goldman. But Peter Kellogg was standing in the index futures ring, and I was younger than you, and he was selling, the equivalent of 100 mini S&Ps up every tick. Every tick. At that time, the S&P was trading about 120. And I asked him, because we could in those days in the ring, I'd be like, Peter, what are you doing? Nice, very nice guy. Said, the Dow has never been up more than $20 in a day. It's currently up $22. So I'm just selling every tick because it's going to come back. And it didn't.
Exactly.
It didn't, right? So the point is to your artificial intelligence thing is that humans can optimize. Essentially, right, we optimize faster than the machines. Peter was essentially being what was the equivalent of a machine then, right? Acting on what had been normal behavior that essentially a machine can only learn from what has already happened.
Exactly, because a machine right now has humans coding what's going into the machine.
Right?
So it's like you're controlling what backtest, what correlations it looks at. So like, even if you think you don't have discretion, you do have discretion.
Correct. And so the fact that in regards to humans, you're saying that discretionary humans, in a sense, we could frame it in the positive. We could say, look, we have the ability to optimize.
Yeah.
And the only way for the humans to beat the machines is for things that have never happened to happen frequently.
Correct. And I think to give people good discretion, because I know a lot of people come into this room, and I've been vocal at times, I've not been vocal at other times. I come off very crass sometimes just because first of all, it's very difficult to show like your true emotions through syntax and text. But a lot of times I'll like call people out for like some of the stuff that they're doing just because like I can see that they have the right idea in mind, but they just don't structure the trade right, or they time it incorrectly, and they just don't have that optimization capability. And I feel like while they're in this room, Jay's tied up to the bones with fucking looking at flow and everything. But like Ranch, for example, has like a service where he can take people under his wing, mentor them, give them the right, not the right, there's many rights in the market, a proper lens to look at the market through that can benefit their P&L. I feel like
but the bedside manner, we don't have time for the bedside manner.
Yeah, exactly. Yeah, no, like most of the time, like if I'm in a trade, like, I mean, in general, like I'm not your mother. I'm not most people's friend in here.
You realize that was the attitude on the exchange, right? We were all 100%. There was a degree of professional courtesy, but there was the bedside manner was just strictly business. Like if you're wrong, you're wrong, or you're stupid, you're stupid, and we can tell you that to your face. It doesn't mean that I won't go have a beer with you.
Exactly. Like I feel like a lot of people, and again, like I'm sorry if I've like offended you or I sounded like a know-it-all. I definitely don't know it all. But I've done a lot.
By the way, nobody knows it all.
Exactly. I've done a lot of macro stuff. I've done a lot of risk stuff, as Cady roasts me for this entire 45 minutes so far.
Right. Like, stop with your macro. Like, it's pointless. It's like macro.
But I think that we're on the precipice of a different we're already in a different environment, and I feel like the stuff that Ranch provides in lieu of the stuff Jay already provides will honestly save people's accounts like this next year. I feel like it's really tough to be an intraday trader right now. You're gonna like
I think it's easier, honestly.
You think it's well, if you're sizing and you can manage risk, it's easier. But
don't you think it's easier to predict the next 5 minutes, the next 5 hours, and the next 5 days, and the next 5 weeks, and the next 5 months?
I think with volatility, no, I don't think so. With Delta One futures positions, with commons positions, with longer term positions, like I think when you add volatility to it, a lot of people just it's really tough. And like people put like stop losses on their options positions, and it's just like
can no do.
Yeah, like you're gonna get
no do.
Like I've literally worked in so I work with the buy side hedge fund, but the people there showed me like first of all, they would leverage the shit out of some of these positions, but you cannot put stops on your options position. If you put stops and you have size on your options positions, you will be hit. The market maker will literally just extend the bid-ask spread and hit your shit and then reverse it.
That's why we don't use stops.
Who decides the risk parameters at these hedge funds that are levered?
Dude, no one knows. This was a small hedge fund. They had piss poor risk. Like that's why people get liquidated all the time. Like it's like they have a risk manager that essentially gets pushback from the MD or whoever runs the hedge fund, and then there's no risk at certain points.
Right. Isn't that funny? Right. Like I had friends who wrote the code for long-term capital.
Oh, there you go.
Okay, right. They wrote the code, and I was like, for real. And they were like, this is years later, and I was like, hey, what did you what leverage did you write that for? And they were like, we wrote it for 2-to-1. And at 2-to-1, and I'm like, where did they have it when they blew out? And the programmer guys are like, they had it at 13-to-1.
Exactly. They will push that stuff up all the time.
Right. For those people who are watching, Long-Term Capital was the first hedge fund that ever required a bailout from the Federal Reserve, so it wouldn't, quote, undo the entire world financial system.
Yeah, it was really bad.
Yeah.
Before my time, but I'm a little bit of a history nerd, so I like read up on that stuff. And
that guy who was a programmer became a monk.
Oh,
he should. That's probably the last place of refuge.
Right? He became a Tibetan monk, for real. He became a Tibetan monk.
Shaved head and everything?
Yes.
Yeah. All right. Well, bless. That's
and
good.
Robes, right? Shaved head and robes, the crimson like Branch's jacket.
Exactly.
Yeah, no, they just have poor risk stuff, man. But like I said, like I understand like people. I remember Jay, I was actually listening to a previous episode of this, and Jay was like, man, some of these people, they're degenerates, they want to gamble. And I get that urge. Like options are a leveraged instrument, and a lot of people use them as leveraged instruments.
Can we time out? It's a time-based
leverage instrument, correct?
Thank you. Right.
Yeah. Yeah, time-based / it's all on a curve. It's all on a volatility curve. As vol expands, the distribution of outcomes expands, and you're using leverage to take advantage of that.
Right. If she doesn't call you back immediately, you're done.
Exactly. So I feel like people go in there naively, and it's interesting, right? Like Chris, I know you're super like esoteric and everything with the markets, and in general, you seem like you're a monk sometimes. So like the market is like probably one of like the biggest paradoxes in like human history, like because it's all focused on like human psychology. Like there's so many things that are counterintuitive in the markets, that even just the fact that people come into the markets and think that they can trade against like Chris, Ranch, Ken Griffin, Rentec, Jane Street, right, all these people with no experience, no mentor, just because Reddit or someone else tells them to do this or that.
Hey, and I feel like buy the dip has worked for 20 years.
How's it going now?
Yeah.
Right.
The dip is relative though, right? Like the dip is relative, like liquidity is relative.
That's a t-shirt right there, right there. The dip is relative.
Yeah. Like everyone, like even in this current environment, like I like any of the back tests that I run, like there's only so much that I can squeeze out of it, which is why I stopped a lot of my discretionary stuff, because like when the fuck am I going to be able to back test federal funds rate at 0, 8% inflation, supply chain constraints, no kind of future idea of what the fuck is going to happen. Like I can't trade on that with my pussy risk parameters, as Chris would say.
Right, you pussy.
Like I
All
can't
due
trade
respect.
that shit.
All due respect.
No,
I
it-
too. The only reason we're in business, a true story. Like I would come home and I was dating this woman, and I said, I would have made a lot, but I got out too soon. I'm such a pussy. And she looked at me and she said, and she was a yoga teacher. She said, the only reason you're still in business is because you're a pussy.
It's
And I was
true.
like, right. So,
Um,
and as a misfit, right? Like people are like, oh, you're a misfit. No, also treated in a positive way. Being a pussy is a good thing. It kept us in business.
yeah.
Right. And so we know we have to stay in business. No disrespect intended. I don't mean that at all.
No, it's all love, man. Don't worry. I got thick skin. I
Right.
got
You know
yelled at.
this, right?
Yeah.
You know this, right? Like there's no crying in commodities.
No.
Today, crude, the biggest commodity in the world, had a 15% drop
Yeah, it was like a 3
in
sigma move
in
on
like
regular
20
terms.
minutes.
Yeah. Yeah, exactly.
Like, how do you model that risk? Hi, honey, how was your day? Go home and explain that to your wife.
It's like you opened up with like crude traders probably just looking out the window. Like you
Yeah.
see like the hardest rhino skin people just like looking
Yep.
out the window being like, damn.
Yeah,
today
crude
was
traders
tough.
crude traders should literally moonlight in a dungeon. Like if it's comfortable, it's not crude trading. Period.
Oh man, that's funny.
I'll shut up,
But
Bronch. You talk.
No, you're good. I'm enjoying the back and forth because for me and what I do and how I teach the people that come on board is so much. I keep it so much more simple than where you guys go. I mean, I drive the short bus, and everybody that wants to come on board the short bus is welcome. I just keep it so much more compact and simple, and because I can't get into the types of thought processes that you guys do because it leans and weighs too much into the machine or the algo world. I can spot that, but I can't be a part of it because I don't have that computing processor in my head. But I can understand it and look for the spots where I know it's going to start to run out of juice and get on board a trade that goes the other way. That's
yeah,
kind of the only way that I can survive
exactly.
and thrive. So
And Ranch, that like I remember, I forgot what flow it was. I think it was like Amazon or something, man. And I remember you had posted something about Amazon hitting like a key level, right? And
yes.
I think you were scaling into that trade. It might have been a different strike. Doesn't fucking matter. You were scaling into that trade on a near expiration with time on it. And then the Amazon thing started getting flow into it.
Yep.
And then everyone picks up on it. Honestly, there's fucking like 50 different flow services. Most of them don't have the context that Jay has.
Right.
So like people see that flow, people fucking
they just
go nuts because it's Amazon. And guess what? Everyone starts hitting the offer. So what is an MM gonna do? They're going to raise the offer so they don't get run over and they can hedge properly. And most people get into that trade when everything is ripping up in a really poor like relative value scenario, while you and your process has already been in there and you can like properly scale in or scale out or hedge or do whatever the fuck you need to do to manage that. And I feel like people get into that trade and then like 10 minutes later, they'll be like, holy shit, my position's 20% down. Well, that's because you bought when implied vol was juiced up because the market maker was making sure that they have time to not get run over by every flow coming in.
Right.
So I feel like people don't understand that sometimes.
Hey, Var, if you had to teach a class, what would you teach?
I would probably teach I would teach how, well, actually, now you got me shook, man. I didn't even think that you were going to ask me something like that.
I mean, because people are going to come and say, okay, well, this is now, right? And in a sense, like, okay, what's the future hold? What are you going to teach now that works later?
Yeah. So first of all, I'm a big proponent to keep it simple, because I don't want people doing like binomial pricing models or fucking going after volatility nodes or anything like that. We don't need to get complicated here. I would find an approach such as volume profile, moving averages. Ranch, I'm not a huge fan of moving averages. Just putting that
It's
out there.
fine.
I love you, but it's literally never ever worked for me. So
it's one piece of the puzzle. We
yeah.
don't use it as this is where you place a trade. We use it as this is where we're going
A
to look for
gauge.
changes in behavior. That's it.
Yeah. So I would find a set of indicators or correlations or whatever that you like. And when that starts lining up, I would get mechanical about what underlying you're trading and give yourself some time for the trade to work out, which is why I'm not a fan of a lot of new people starting intraday. And I was literally just having a conversation with Matt about this. Sorry to put your dirty laundry out, Matt, but he was in a great trade that would have worked out, but it didn't work out in the next little time that he had given himself for it to work out. So
okay, hey, wait a minute, time out. We're talking about a class you would teach. So what is this that you would teach that would help the people?
I think spotting cheap and expensive shit in the market would be what I teach, and ways to spot that.
Okay, so that sounds like a reversion to the mean program.
Yeah.
And then how do you cope with the mean changing?
You manage risk around it. I feel like if you give yourself time, again, reversion to the mean is an inevitable fate for everything in time. Like everything is going to revert to the mean.
But the mean is changing. The mean is never static.
The mean is never static, but you got to change with the mean, right? You got to either improve your position by hedging against it, whether it's selling shit to improve your cost basis.
We understand the mechanics. We're trying to talk about what are we going to teach people who want to look towards the future. And then that's the burden that we're all facing in a sense, right? Like I get you, right? Like a great reversion to the mean program is good. And we understand that the mean is changing, right? So then if we're going to teach a reversion to the mean program, then isn't it really just then teaching about how the mean's changing? Because any monkey can do reversions around so essentially teaching, because reversion to the mean works 85% of the time.
Correct.
Right, but then we know that the mean is not static. So essentially to teach a correct reversion to the mean program, we have to teach how to recognize when the mean is changing. Or in your case, what you said, understanding what is expensive and what is cheap with the understanding that the mean is changing. So we want to be in step with the mean changing when we're making those decisions.
Correct. Also, all of what you're saying is spot on. But I think that another thing that I do that might not fit some of this stuff is I never really have I don't really give a shit about like the mean for just one underlying. Like most of the stuff that I run is like cross asset. I have a bunch of positions, not a bunch, but
But people who are watching don't really care about what you do. They're caring about what you're going to teach them. Right?
Well, exactly. So my advice would be to have stuff that is cross asset. I feel like the tendency for a lot of people is to look at a position that gets flow. Let's say like a SPY call, right? They'll see that it gets flow, and in their head, they'll note down that flow and think that the buyer of that call, that's the only position. That's their only bet. And I think that is vastly incorrect.
That's a rookie mistake, obviously.
Because you don't know their book. They might be short a bunch of constituents of SPY and just hedging with the SPY call. So I feel like maybe what I would teach would be more so just like market dynamics like that, and leave like the actual strategies to Ranch. Because frankly, like I don't think so I'll be honest, like you know how I said like I'm not your mother, I'm not your friend, like I'm not, I don't, I
Did you just quote the line of a Prince song? I think you did.
Yeah, no, don't stop. You're right on, right?
I was gonna say, I'm not your mother, I'm not your friend. I'm also like, I don't particularly give a shit to teach you all anything. Like, I don't think that I'm like some guru that's like going to be able to teach you anything, because I'm fucking 29 years old.
Yeah.
Like, Ranch and Chris have been through so many more market regimes.
But look, I'm in the same boat. The crude just dropped $15 in a matter of minutes.
Bro,
Today,
but
right?
you trust me, you have been through more wartime stories. You have
Yeah, but
quoted
that doesn't make it. I
LTCM.
mean, how are you going to teach? How are we going to teach people in this environment?
You
I
got
am
to
teaching
size
them.
properly.
I know,
Exactly.
right? Like how can you like hi
Oh
everybody?
my God.
This-
Someone just said, shout out to Puru. Oh, good grief. Yo, hold on. Time out.
Okay.
Please avoid FinTwit like the fucking plague, because it right now is a cesspool of a bunch of Furus. Like Puru Saxena, y'all know him. He's an idiot. Like, none of his shit makes sense. And he has a huge following that people just like mimic his trades and then get mad when they lose money. The thing I would teach, Chris, actually, great segue. The thing I would teach is to critically think. Like, I feel like so many people don't critically think, and even if you have a teacher, you got to get in the mindset of, like, regardless of Ranch tells you something, you got to be like, why is Ranch telling me this? What is the basis? Because guess what? If you put on a trade with size and you lose money on that, you can't go to Ranch and be like, yo, what's your Venmo? I need to comp back that stuff. Like, no one's your mother, no one's your friend, no one's your risk manager. It's the fucking jungle out here. Like, you gotta learn to hunt, kill by yourself.
Right.
And I would teach that. I would be very real about that.
Right.
I'm already doing it. I'm going to throw in a shameless plug right now too. I'm putting in the link to tradingthepost.com.
Good luck, right? Teaching
the class is going right now. If you're interested,
yeah,
check
the
it
craziest
out.
market in history and hang out with Ranch. I mean, yeah,
Hey.
good, right?
They got a free fucking trial. I already looked this shit up.
I
Like,
watched it. He's good.
Yeah, just sign up. It's a great overlay to what you're already doing. Like I said, I run 3 different books. Well, I stopped.
You pussy, stop.
I stopped the RV book, so 2 different books.
Stop. Let people make up their own minds. And I don't think, like we're saying, it's got to be super hard to teach in here. So kudos to you, Ranch, to teach in here.
Yeah, definitely. I feel like you're doing God's work, man. I think I told you that too. Like, you're doing God's work teaching people out here.
Yeah,
But,
I mean, not only because we're out there, it's like every day is a Timothy Leary experience, and then trying to go out and be like, yeah, no, you really need to critically think. If you can't understand the position, if you can't understand the psychology of the person on the other side of the trade of you, and you can't see the weak link in their thinking, then you can't put the trade on.
Exactly.
It's just a sequence of pieces that you have to put together. And if you can learn how to link those things together, you can get yourself into positions where you have probability on your side. That's all you're trying to do.
And to the
100%.
people, and the people who are out there who are alone and trading and looking at a screen all day and don't have anyone to talk to, we hear you. We are in the same boat. And
the same boat.
And it's extremely lonely, and it's extremely dangerous. And it's like you want to go home after some of these days and just put your head on the bed and not go outside.
Yeah.
And
oh, sorry, Chris. I was going to say, just so that I have, because I feel like, Chris, you had asked me earlier about like my biggest loss, and I had been lucky thus far this year and haven't had a loss. I just want to like stress the importance of like having like a mentor or someone like these folks here to like at least guide you through some shit, because like back in and this is going to be a little bit personal, so if anyone gets queasy, you can go ahead and puke into whatever's next to you. I don't really give a shit. But back in like 2018, I tried to go like full-time trading after my quant job, and I was like I kind of want to do this, but I don't really want to work for the man. And I was kind of like in that state. Being a full-time trader is very difficult, and I got very, very sick, like health-wise. So I had to like get back into the workforce and for medical insurance and everything. I think I suffered shit. I know I lost 80,000 in a day. But I think for
Right.
2018, I was down 300 something thousand between trading like Trump. Like Trump was super active after Volmageddon, and I trade a lot of like Amazon. So like he was shitting on Amazon with UPS. There was the
Remember that.
trade war stuff.
Yep.
There was like not inflation so much, but there was like a Fed hiking cycle that everyone saw. And I was just really trading the news a lot of times. And yeah, it was really bad. I had lost probably like 300 or 500,000 in 2018. And then on top of that, I had to take money out to pay for my medical expenses. So like if anyone is like young here, and you're like my age, younger, even a little bit older, and you're kind of like new to trading, like I would really take advantage of people like Ronch, people like Chris, people like Jesus, in this room to try to ground yourself. And we're in this weird like work from home environment where like you can kind of do both things. Don't rush into anything with trading, because like if you think you're hot shit, high chances you're not. Any anyone that knows my gains this year knows that I'm a big proponent of, I just got lucky. There was a time in December where I was telling Lucy this, I was literally like shitting my pants because it was that post Christmas low liquidity. Everyone had bought puts that had a fund to make sure that shit didn't hit the fan at the end of the year, and all of that flow was rolling off, and there was like a consistent bid for about a week that I just like took to the chin, and like I stopped posting in the room. I was like trying to figure out call spreads. I was doing a bunch of modeling shit, wasn't getting sleep. It was really bad.
It's
And
called end of the year markup.
yeah, but like I was just I I think it was more so I was in the green by a significant amount. And when that end of the year markup happened as fast as it did, I
It was
saw
brutal. You remember that? It
saw
was
all my
brutal.
profits disappear. Like
Yeah.
it was really bad. And psychologically, it was like a really big toll on me.
Yeah.
And if I didn't, a little hedge plug here, if I didn't hedge, I would have eaten a lot more shit. So I just kind of like held on to the position, and honestly, the year started, and aside from this whole war thing, which I don't even want to get into, like I'm not happy about making money on that scenario. My whole thesis was really just inflation and the Fed changing tone. I really just got lucky, and the flow started hitting, and I can relax for the rest of the year for both my clients and myself. But like, trading isn't easy, guys. Like I understand, like trading is not easy, and it's a very emotional journey. And
we can always meet for a beer. Anybody.
Yeah, no, I know. I'll definitely.
And VAR will attend.
Yeah, no, I'll definitely attend. I'm always down. But we got to get pizza though. I just anytime I can get Joe's Pizza, I'm always getting pizza.
We can meet for pizza, and we can right, the winner of that day buys.
Yeah, exactly.
Bart's kind of a crackhead, right? Like you got your pizza crackhead.
No, New York. Hey, Ron, New York pizza is really solid.
It's really solid. Man.
It's in my opinion, it's like some of the best on the planet. So
right, there's Chicago.
Yeah.
And what else is there? There's like New Haven pizza, right?
New Haven pizza is said to be the best pizza.
Yeah,
but I don't know about that.
Yeah, Pepe's was the right near Yale. Apparently, that was where they that's the anyway. VAR, thank you for coming.
Yeah, no, thanks for having me. Like I said, market's tough. Lean on people. Don't lean on me, because clearly I don't know what the fuck I'm going to teach if I have a class.
Right? Can you imagine that? Like, Branch has got to teach.
Yeah.
Like, holy cow. Anyway, good luck.
Yeah, no, but yeah, I wish you all nothing but the best. And again, if I have offended anyone or come off in some sort of way ever, my fault. Kind of.
Yeah, Sally's.
Don't apologize.
Yeah.
Paul says Sally's is better than Pepe's for sure. And anyway, yeah, thank you for coming. It's
Yeah,
been,
thanks for coming on,
and
Bart.
you're
It was
welcome to
fun.
come back anytime. And certainly for real, find me and I'll buy you a beer here.
Yeah, I'll send you my deets after this, Chris. And
Okay.
Ronch, if you're ever in New York, we can hang out as well, sir.
I'd like to make it. I'd like to make it back there for a visit. There's so many places on the list right now.
Yeah, it's opening up
I've
too.
got pent up demand. So yeah.
Yeah, it's opening up too. So looking
All
forward
right.
to it. But yeah, if anyone has any questions, feel free to ping me.
Hey, VAR, current thoughts on tomorrow's action with the CPI?
I think it's highly priced in, man. I think like the pain trade is up.
Yeah,
I'm
right.
not. I'm
right.
not
I
for
agree
it,
with you.
but,
Right.
like,
I'm not for it either. But you
Yeah.
know, they were overdue. They were washed out yesterday. So
Yeah.
how far can they run them up tomorrow? Yeah. Right.
I
We'll
think
see.
like if we see like a 45 handle print on ES, I think it might stop out a lot of people, and then good time to go short again.
You think?
Yeah.
What's that up? That's up 200 tomorrow,
250.
right?
But
Yeah,
hey,
250.
it's possible.
possible. It
I've
is.
seen weirder shit happen.
Me
Even
too.
yesterday's action was nuts, where we
Yeah, it
I know
was.
the
just
way they
like-
went out in after hours. It
Yep.
was just like people must have been hanging themselves.
Yeah, no, it's the market will find a way to make it painful for everyone.
Yeah, just
Before,
remember, right? Like
before
we're
whatever
saying, right? Like it's
happens.
going to do things it's never done before.
Yeah. So well, I've been a proponent of like I've been watching VIX more as of late. I think like a VIX, the floor is slowly like raising higher and higher, and we're in a high vol regime. So I think probably like VIX 22s 25 with the VIX roll coming up and everything.
You have a pencil?
Yeah.
Okay, write this
Pencil.
down. A pencil, yeah.
Who the hell uses a pencil? There you go.
Or a pen, right? Do this. Make this chart. Make a use a 10. Make the VIX into a line chart, a daily line chart, inverted, right? Minus VIX on a daily line chart, not a bar chart, a line chart. Okay. Then put a 10% moving average, 10-day moving average. Put a 10-day moving average on that VIX chart. Okay. Then put a 10% envelope around that
10-day.
Around that 10-day. Okay. And when the VIX when the VIX closes 10% from its 10-day moving average is when you fade it.
10%. Huh.
Okay.
All right.
All right. So you you have a 10-day closing moving average, and then you put a 10% envelope around that 10-day moving average on the close, right? And then when the VIX closes and then it's inverted, so you can overlay it or just make a chart on top of it with the SPY.
With the SPY, yeah, and play that correlation a little bit.
Right,
yeah.
you can see the correlations, like the SPY, like the VIX is making new highs and the SPY is not making new lows.
Yeah, and I think you kind of saw that yesterday into the close, actually.
Right.
Like from the open to the close,
right.
VIX actually really underperformed, and SPY kind of just ended up where it fucking
right. It looked like some
so.
sort of global margin call or something that was going down.
Yeah, exactly.
Anyway,
good. It was interesting.
Good to come out and on my side of town, or if you want, I'll come over. I'll ride the path over, and
man,
you
no
have
one wants to be in Jersey. I'm only in Jersey to avoid New York rent.
No, that you have a nice place in Jersey City where all those, like on that brick street, where by the pass station there.
Yeah, I'm right by that pass station.
Yeah,
like
there's a couple great bars in there.
Yeah, there is. It's really good, and it's right by the mall, and there's a bunch of food places, everything.
Yeah. So I'll easily ride over as long as it's not snowing like it is now.
Yeah, it's been weird today, but yeah, no, I really appreciate you guys giving me the opportunity to speak and try to talk some sense into my degenerate brethren.
Yeah, and saving some people.
Hopefully.
Right.
But yeah,
good intentions, right? There's nothing bad can come from having good intentions.
Yeah,
Isn't that the road straight to hell?
Is that from a Prince song?
That is not. The road to hell is paved with good intentions.
Ronch, good luck teaching, you guys. Right?
Right,
really, guys. I mean, that's God's work, is teaching in this marketplace.
Yeah.
Well,
definitely check it out.
If they can apply what they learn, they'll be fine.
Yeah.
Yeah. And, hey, it's all about staying liquid. You can learn as much as you can, as long as you're liquid.
This is true.
You cannot learn trading paper money. There's like a huge
True.
emotional component that's just like not available.
Yep.
The only thing that you can really do trading paper money is like learning like a ladder or like a dom or stuff like that, like mechanical stuff. But anyways, I'll talk y'all's ear off.
Okay.
Appreciate it. Like I said, have me on whenever. Chris, Ronch, hoping to see you guys in person soon. I don't think Jesus will ever let me see him in person. So
Right. Well, yeah,
We're
hopefully.
gonna figure that out one day.
Thank,
All right,
and
you guys.
everybody, thank you for coming, and
Yep,
thank
thanks for
Charlie
coming.
for putting us on the air.
All right, y'all. Have a good one.
All right, bye.
cool. Thank you. Bye.
Peace.